Well, my next guest says the currency could recover from its lows as long as leaders can show some unity on Greece. He is from LGT Bank, and he's an investment strategist, Simon Grose-Hodge, who joins us now on the line live here from Singapore. So good morning to you, Simon. Now, they're still squabbling over what to do about Greece. And also, we just had Fitch downgrading Portugal's credit rating. So do you still think we might see a rally in the euro?
Good morning. Well, what we're looking for is simply the fact that the euro is very much in oversold territory, and that means there is the potential of a relief rally. Despite all the squabbling, we very much believe that there will be a solution put forward at someone, whether it's the EU, whether it's the IMF. Although the IMF is less favourable, the markets in general don't really care. They just want to see that there is a solution in place, that Greece is going to be able to access funding on a sustainable basis, and most importantly, at a price that is going to allow them to be able to achieve the goals that they've set out, which are already quite ambitious. But the reason we only consider it to be a relief rally is there's still going to be an awful lot of long-term problems. The amount of austerity Greece is going to have to put in place, and also the likes of Portugal and Spain, means that those smaller economies are going to be borderline in recession for the next 2 or 3 years, and that's going to make the outlook for the whole euro region a lot dimmer. The places like the US with a more flexible economy are going to recover all the more quickly. The ECB is very much going to be handcuffed by this amount of debt from being able to raise interest rates in the next 6 to 12 months. So the long-term outlook for the euro is still very much negative, but there may well be some form of a relief rally when the solution does finally come through, when we do see at least a modicum of unity among the EU leaders, and that rally is very much something that you should be selling into.
Now, do you not agree that if the IMF were to step in, this would undermine investor confidence in the EU and in the euro?
Yes, I agree with Bini Smargi's point. I mean, the Greece situation overall is not even particularly big. We're talking about 20 billion euros of funding needed in the next couple of months. That's not a great deal of money under modern circumstances from what we've got ourselves used to. So the fact that they can't even sort that out on their own and they have to bring in external people, that's a very bad sign for the supposed unity in the political leadership in the EU zone. And it raises the question, what's going to happen with the likes of Spain, Italy, Ireland, Portugal, all of these other countries that may also run into problems? Are they all then going to have to go to the IMF? Then the IMF has far too much control in the EU, and rules which aren't even being kept to now are going to break down even further.
Okay, Simon Grose-Hodge, investment strategist at LGT Bank, coming to us from Singapore. Thanks so much for joining us.